al Pacífico. Esta mañana tenía de hecho varias maniobras militares e informaba de ellas China con Rusia, precisamente en el Pacífico. Con todo esto, les decía yo, vamos a buscar también el protagonismo de lo que está ocurriendo en el mercado estadounidense y de hasta qué punto puede hacer daño unos tipos de interés en el 5% de manera prolongada. Tenemos al otro lado a Callie Cox, analista de inversiones de Estados Unidos de eToro. Callie, good afternoon, how are you?
Hey, doing great. Good morning from the States. Thanks for having me.
Thanks to you. Are you worried, are you concerned about the current market environment, or are you optimistic? I mean, in the US market.
Yeah, so, thinking about the market right now, obviously stocks are selling off in the U.S., bond yields are rising. There's a little bit more worry about inflation possibly picking up again and what the Federal Reserve could do for the U.S. I'm not so as pessimistic as everybody else. We have to remember that sell-offs happen in healthy markets. And right now, it's good news that the economy is doing well. I mean, we're a year and a half into interest rate hikes, at least on the U.S. side of the pond. So we look at this, it may require a change in strategy, looking for value in certain stocks. But I'm not sure that this is as big of a concern as some people are making it out to be.
Not optimistic, not so concerned about that. But in the middle of the point, in the middle, just in the middle, searching or looking for the value. But do you agree with with Bank of America about that interest rates, prolonged interest rate in 5% in the Federal Reserve? Are you worried about that? It's you talk about looking for value, but it's enough if this environment is so long.
Yeah, so we've been saying for a while that the Fed could keep interest rates higher for longer. We agree with Bank of America here. We're not sure how long higher for longer will take. I think that's going to depend on the economic data we see, especially the data from the job market. But for now, again, I think if you're expecting higher for longer interest rates, it just takes a change in strategy and a change in perspective when you look at this market. When interest rates are high, it doesn't necessarily mean the market is doomed, but it does mean that you need to focus more on profitability and durability. Thinking about those stocks that could provide you exposure to upside in the market, but stocks that could also survive a pretty tough operating environment because borrowing costs are high and it's much harder to make money in a high interest rate environment.
Do you think that reduction occurs thanks to the central banks, or it's because the external agents? No. If you think that the reduction of the inflation in United States, it's because the action of the Federal Reserve, or is because the external agents? Like energy.
Well, I think it's a little bit of both. I think there are some worries about what the Fed could do, and the Fed and inflation have been the two of the main concerns of investors over the past 2 years or so. I think there are some, peripheral worries here. Of course, oil prices are rising, and we're reminded of that every time we go, fill up our car at the pump. And then there are also some scary headlines out there. There's, Evergrande filing for bankruptcy. Of course, we have the Country Garden woes in China. So there's just a lot on investors' plates right now. And when prices are so high, it does take a slate of pretty good news to keep that consistent. So, expectedly, I think investors are just, maybe stepping a little back out of the market just to, see what happens. We'll see what could happen over the coming days and weeks.
We don't see finally a recession in the United States.
I don't think a recession should be a part of the discussion right now.
Even a soft landing too.
Excuse me, what did you say?
Neither a soft landing too.
We said for a while we think the Fed is pulling this off. Of course, a recession is a concern, but right now with growth so strong, I think a recession should be the least of your worries.
Okay, and what is the perspective of eToro for the remainder of 2023?
Well, we don't step out. We don't give, stock price targets. We don't necessarily make predictions. We don't have a crystal ball. But right now, we're just telling our customers to tread carefully here. I mean, remain optimistic because we haven't seen the economy break down yet. But at the same time, because interest rates could stay high, focus on profitability, look for value, those stocks that are trading at a cheap forward price to earnings ratio, pay attention to where we think earnings growth could increase or could, pick up in certain sectors next year. And remember that sell-offs are healthy, and focus on your own time frame.
See that value that you are looking for.
Yes, but well, I'll say two things here. Every investor is different. They have different goals, different time frames. If you are one of those short-term investors who is looking over the next few months and you think interest rates could stay high, it makes sense to look for that value. However, if you're a long-term investor, which many individual investors are, prices are down right now, but keep some exposure in this market. Understand that if the economy doesn't fall apart, chances are we're in a bull market, and that means prices could turn higher and the sell-off could be rather shallow.
Well, we see with all of that, we included all of your advices in our strategy. Callie Cox, eToro investment analyst, thanks for being here.
Yeah, thanks for having me.